Supermicro Computer made a surprise announcement last week, raising its revenue guidance by 30%. The company initially thought revenue would increase 50% in the second quarter to $2.8 billion. It now expects revenue of $3.6 billion, which is an increase of 100% year over year. Unsurprisingly, this news sent the stock soaring, and now the company has a market value of $26.2 billion. Supermicro sells hardware systems that are used to build data servers and storage systems. Demand for Nvidia's GPU systems has been the primary growth driver for SMCI over the last couple of quarters as customers race to build out their platforms for generative AI. Trailing 12-month revenue comes to $7.4 billion with net income of $600 million, but those figures don't incorporate the latest guidance. Account for guidance and next year's revenue could easily hit $15 billion, with net income potentially coming in at $1.2 billion, so Supermicro's stock is more realistically valued at around 22 times next year's earnings. Compared to many growth stocks, that may sound cheap, but for a hardware company it isn't particularly attractive. Cisco, for example, trades at 16 times earnings and Hewlett-Packard around 10 times earnings. And as a hardware business, Supermicro has slim profit margins of around 8%. Those margins will come under pressure if there is a change in the cycle. Supermicro's stock was actually delisted from the Nasdaq in 2018 after the company disclosed material weaknesses in its financial reporting. The key risk is that demand for servers and storage is experiencing a massive pull forward in demand. Companies are building out their AI platforms now, but that growth will eventually flatten out as projects get cancelled and new competition emerges. Supermicro's response is that it's a company built on the expertise of its engineers, not on its hardware, and it points to several megatrends working in its favour, from AI to self-driving to video streaming and 5G. And unlike many AI stocks, Supermicro has minimal exposure to China. That's another advantage to owning this company, and as an investor, there's simply no way you can bet against this kind of growth. Let's assume that Supermicro manages 100% revenue growth in 2024. 40% in 2025 and 20% in 2026. That would put annual revenues at around $25 billion by 2026, and an 8% net income margin puts net income at $2 billion. A 20 times multiple then gets the valuation to $40 billion in 3 years' time, which works out to an investment return of around 15% per year. That sounds good, but there are a wide range of possible outcomes. The history of hardware is notoriously cyclical, and the threat of commoditization will always exist, but such impressive performance means that Supermicro Computer is now a momentum stock. As long as growth in AI continues, the stock can continue to move higher. But these are my personal opinions, not financial advice, and I hold no position in SMCI. For more investing videos, make sure to visit my website, 3minutebreakdowns.com. Thank you for watching.